We find ourselves kind of falling into these same traps, like especially early on, chasing those quick bucks. And I was guilty of that initially in the space too. But then when you start looking back long term, Bitcoin just makes more and more sense for our financial and monetary futures. And you said when you had a son, that really seemed to change for you. And I totally get that. And now you're building FinPeers. And I would love for you to kind of give us a simple breakdown of that for our audience that might not already be familiar with this project.
So basically what FinPeers is doing is that we provide access to the Bitcoin ecosystem, especially targeting family offices and high net worth individuals. And we also own another company, H100, which is currently the biggest treasury company, Bitcoin treasury company out of the Nordics, holding close to 800 Bitcoin now. And what we saw there was the institutional and high net worth demand for Bitcoin treasury companies, but FinPeers also provides liquidity to over-collateralized Bitcoin loans and Bitcoin hedge funds, and basically trying to be the partner for high net worth individuals and family offices when they want to allocate to this industry.
Got it. And you mentioned the Bitcoin Treasury company and that you guys have your own Bitcoin Treasury. That has been the big hot topic of 2025, seemingly for sure. We're seeing new companies pop up with their own treasuries. It seems like every day right now. When did you get into the Bitcoin Treasury business, and why do you think that's such a great long-term play as we continue to build out the Bitcoin ecosystem?
So first of all, we started to follow Sailor quite early, but it really clicked for me that all the local markets will have a Bitcoin Treasury company when we saw what MetaPlanet was doing. And immediately after that, we started looking, okay, who in Europe is doing this? And back then it wasn't many. And we ended up being the first Bitcoin treasury company out of Sweden, and now taking a leading position in the Nordics in general.
Very amazing. So you're a trailblazer of sorts up that way. That's incredible. My stepfather is Swedish, so I've had some time in Gothenburg. I know it a little bit. I got to go back. It's a beautiful country. And I was doing some research on you before we had you on the show, and I saw something that said you in the past have mentioned that you feel like private markets are a little old school. I would love for you to kind of give our audience an example of how you feel things are currently still stuck in the past and how you're helping build for this new monetary future right now, specifically with FinPeers.
So yeah, what we are strong believers in tokenization, and I think most of the tokenization will actually happen on top of Bitcoin, and more specifically on the liquid sidechain, where you basically can peg in and peg out Bitcoin and make all your investments Bitcoin denominated at the end of the day, because I think many people starts to be Bitcoin denominated now, but you still need cash flow. You still need to invest into businesses. And I think having that layer where you can like invest with your Bitcoin or your stable coin into a more seamless ecosystem where you don't need to go public, but you still can use what we see as digital distribution. We personally believe that three things are very important to build billion-dollar companies in the future. It's one is digital distribution. The other one is digital asset. You need to access it as a digital asset. And third, you need digital workers. Digital workers can be people on X sharing and like this, like you need to have people helping you get the message out, but also eventually AI working for you and your companies. So what we have done at FinPeers is trying to be the liquidity layer where we can educate investors to invest into these tokenized assets. We acknowledge that it's still early. I think Bitcoin treasury companies is one step in the right direction, which at least involve digital assets and digital distribution. But at the end of the day, I think we will see more or less the full private markets will go to be tokenized, and I think most of it will happen on top of the Bitcoin blockchain.
Yeah, well put. And on your platform, you use the blockchain, right? And I would love for you, a big part of what we try to do here on the Blockchain Report is make these technical terms and new things a little more accessible to the masses, right? So for someone outside of the tech world, how does the blockchain actually make investing easier or better for people as we move forward?
So most of the traditional financial world is very siloed. So if you want to invest into the Swedish stock markets, you need to open up an account with a broker that has access. If you turn the whole structure around with tokenization, you can have one wallet accessing everything. It's basically an internet layer where you have one wallet access to all the investments, and you can basically build the whole financial systems around internet first, and basically remove all these silo barriers that you see in the traditional industry. I think in 5 years, it's already taken up most of the big markets, to be honest, especially when it comes to fixed income products. I think Bitcoin per share is going to be a key metric that most investors will have as their KPI, and FinPeers will help the investors increasing Bitcoin per share and get a Bitcoin return, and not like necessarily measuring everything in dollar, which devalue itself with 5 to 8% every year. So our goal is to find investments that can increase your Bitcoin stack over time with different strategies, and do that only.
How close do you think in 5 years from now we'll be to, a Bitcoin standard? Is the dollar still going to be the main currency of the world, or are we rapidly approaching a turning point or an inflection point where everybody's actually seeing the world through the lenses of Bitcoin?
I think most companies will hold Bitcoin in their balance sheet. I think that will be the superior asset to hold to protect your hard-earned money, either as an individual or a company. And we will see that in most assets, to be honest. I think we will see Bitcoin mixed with real estate. We will see Bitcoin mixed with private equity. We will see a Bitcoin as part of a better financing deal. I think it's just like Bitcoin is a superior collateral. When you see these Bitcoin over-collateralized Bitcoin loans, I think you would rather invest into that compared to any of the other private credit products out there. Because you can get the same return and it's over-collateralized and it's zero operational risk, as you see in the traditional private credit markets. When you lend to an over-collateralized Bitcoin loan, you have the Bitcoin there, it's 100% over-collateralized. And if they don't pay you, you can sell that a very liquid asset. So I see Bitcoin eating up balance sheets. I see Bitcoin eating up the debt and fixed income market. And I think a lot of the investors will start thinking, okay, do I actually increase Bitcoin per share here or increase my Bitcoin stack? Because Bitcoin will be the hurdle rate, especially for risk investments.
Yeah, and the Bitcoin per share term we've seen really grow in popularity with the Bitcoin treasury companies, of which you guys are one of. Which always begs the question for me, and I would love to get your thoughts on this. Do you feel like the Bitcoin treasury play is getting overhyped at all right now? It seems to be moving so fast, and you have companies that are following Michael Saylor's playbook, but not everybody is in the same position as Strategy, right? Where they've been buying Bitcoin since 2020. So if we were to potentially see a large correction, as we've seen many times in Bitcoin's past, we could see some of these companies that bought in at 120 be well underwater if we're at 90K. Do you think we're in danger of that at all, or are we entering a new phase of Bitcoin's price cycle where it doesn't fluctuate in the normal halving cycles we've seen previously because there's so much institutional money and governments that are finally getting on board? What are your thoughts about that as we kind of enter this new era of Bitcoin?
I mean, to answer the first question about like what happens if the Bitcoin goes down, a long-term thinking Bitcoin treasury company will still raise capital and still use the capital markets to increase Bitcoin per share which is the key metric. I think if you don't believe in the long-term value of Bitcoin, you should never invest into Bitcoin treasury companies. And it's quite dangerous to actually evaluate Bitcoin treasury companies in dollars. You should really measure them in Bitcoin, because that's the path we are going into. We want to increase Bitcoin per share and give more Bitcoin to our shareholders over time. That's why you should buy Bitcoin treasury companies in general. If you only believe in Bitcoin, buy Bitcoin and keep it in cold storage, and everyone should do that as well. But if you want an actively managed Bitcoin vehicle, like a Bitcoin treasury company, then you should measure, are they able to increase Bitcoin per share over time? And there you can actually use the bear market to be more efficient, acquiring more Bitcoin and increasing Bitcoin per share faster. So what you should be aware of is how is the debt structure of these Bitcoin treasury companies. In our example, we have 5-year terms, 0% interest rates, and no liquidation risk in between. So you believe Bitcoin will be worth more in 5 years than it is today. So if it falls down 50%, it doesn't impact our company. The second thing we do is that we do Bitcoin denominated debt, which is if we take on 1 Bitcoin as debt, we owe back the Bitcoin. So it doesn't necessarily change anything. If the Bitcoin price goes down in dollar, we just return back the 1 Bitcoin. It doesn't put any additional credit risk on the company. So bear markets is for accumulating more Bitcoin. It's always been like that, and that's also true for Bitcoin treasury companies.
Is that how your Bitcoin accumulation strategy, you expect it to play out as you, I assume, continue to try and put more Bitcoin on your balance sheets? Do you guys wait for what you anticipate to be bear markets and then load up? Or are you like Michael Saylor and you buy when you buy, because for every Bitcoin you don't buy, you're gonna be missing out on $13 million in the future, or whatever he says? What is your strategy like at FinPeers, and or H100, how did you come to that conclusion that that's the best way for us to accumulate Bitcoin as we move on to the future?
No, we follow very much what Michael Saylor is doing. We think that is the right thing to do, because in each part of the cycle, you have different options and different strategies and different opportunities to accumulate more Bitcoin. And therefore, it's better to be in the market than timing the market. That's at least my personal experience, that I'm not good enough to timing the market, so I should just stay in the market.